Good morning, everyone. Today is Friday, March the 14th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. So, what are we seeing? Well, we had the moon crest full last night, and that weird statistic that says if you buy the full moon, price action is likely to hold in your favor just so long as you sell by the new moon. I'm not quite sure where the new moon sits right now, but I will get that to you by the time we do the next video. So let's take the ES, and this is the only one I'm going to use on the weekly chart. But this is the battleground we've been sitting in for several weeks in times past. And as we know, in a market, we tend to see price action move deeper than we think it's going to, for longer than we think it's going to, in both directions, either bullish or bearish. So here we are. This is the 50 on the week. We came all the way down into 55.20-ish. What's that low? Yeah, 55.09. And now we are in a pretty solid bounce this morning. So let's take a look at what the traders are trying to do. It is a Friday. Fridays do have a tendency to be bullish most of the time. And this morning, actually last night, in the Globex event, we had this area as our opening range. And as we look at the E-mini S&P, that number looks like 55.50 and then 55.57. As long as we hold the pre-market low, buyers are going to continue to buy. Now, you might say, good grief, Anne-Marie, look at how far away it is. Yes, indeed. Look where the point of control is. It's 56.10. Also happens to be a line that we have moved, and this morning, inventory is very long. Now, notice what's happened over the last, let's say, wow, look at how many days. Let's start here, all right? Since March the 6th, every bounce into the 50 simple moving average on the hourly has either broken through and rejected or gotten right to the edge and rejected, except for day before yesterday, where the break was very sharp, but also exit liquidity. Popped up in the overnight, exit liquidity. So are we going to see the same thing? Here's how we know that. If we get up over this 50 and we start dancing around here, building a new balance zone, and we do not break the high of the first hour of open, price action will continue to move further to the north. Where are we? We're in a buy the dip formation. In times past, especially in the last several days, every time we've come into this range, we've seen exit liquidity. Does it happen today? I do not know. But my suspicion is that because this is a weekly low area, very important across a lot of time frames, we could see a reflexive bounce. And here's the thing. Big money has been shorting through all of this at the very top of the range. Look at how much selling is up here. That's 56.30. If we happen to close above 56.30, all the shorts that are piled in here that have deeper pockets, they're going to run for the hills. And where are they going to run for the hills? Maybe all the way to the low volume node that's sitting here on the hourly chart. Now, what am I looking for? I'm looking for a decision that says, hey, we need to keep buying. Where is that? Well, it happened in the overnight if we're staring down our tight simple moving average and we're looking to hold above the VWAP. That's going to be the same thing. So there could be a little bit of risk in trying to go long if we don't wait for price action to come back to us. And in the E-mini S&P 500 futures, I believe that number is 55.74. Downward flows, look, low, lower low, lower low. We had a higher low and a higher low, and then broke right through it during the trading day. So if we continue this line here and we hold this trend, we can see that it's now breaking through that trend, and the pullback is going to give us the buy zone today, unless we lose 55, 57, and then it's a little bit hands off. Okay? The goal for the trader is now, here I am up above the 50. You're going to start to see sellers try to come into the market. If they are not strong, the shallow pullback into 55.70 is going to give us long action. Be careful today, because the framework of the flattening moving average has shifted. It was sharply downward. Now it's flattening. Watch out. Okay? Plus full moon. And we came into some very important weekly lows yesterday and quickly recovered. All right, let's take a look at the NQ. This is the E-mini NASDAQ futures. Same sort of thing. For 2 days, the moving average has been flat. It broke through it and above it 2 days ago, came right back down to test it. Low, higher low, retest of the low here at 19,400. My eyes are not focused today. Look at where the 1 hour formation is. Let's draw a line there so we keep our eyes on this number. It's 19,387 and then 19,296. And look at the run. This breakaway here are shorts that are beginning to cover from this area that they began shorting yesterday. The balance zone tells us that the run-up could be all the way to 19,700. If you're on Fast Markets on Top Step TV with me and Dakota, Dakota was talking about this likelihood, this move back up into this range. I did not disagree with him. My question was, okay, how are we going to get there? Take a look. We've got ourselves a rotation that tested the low at 3 o'clock and began to bounce. What do we expect here? Well, we expect the sellers to cover the weak hands, and if they pull back, it's going to be buying pressure that takes over, because we've got positive momentum. We're above the VWAP, we're above the 5, we double bottomed on a weekly formation, and so now we have to see, okay, does volatility calm down enough for me to get into 19,400 so I can take a long? That would be fantastic, right? I'm looking for 400 to 387. I had an order in at 318 overnight, and I put it in at 9 o'clock, and it did not fill me, just ran without me. But I did have that feeling as I was looking at the bounce and realizing this was a bottoming formation on a weekly chart, that we had this upside pressure. So looking to re-enter on any dip formations here as we move back into the top of this balance zone. That's what we're looking for. Top of the balance zone, 19,680, 19,775. Okay? So that's what we're staring down. If per happenstance we lose 19,400, do not try to buy the dips until it's told us it can hold 19,300. Let it come down here on the hourly chart, frame itself out, and we'll see upside pressure. Let's go to the YM. All right, YM not looking quite as pretty, right? As we know, foreign markets enter and leave in the big caps. And as our administration continues to make frenemies, and I'm putting it that way simply because they have to play with us because we have the most money. I know, it's very sad, not fair. Whichever you sit, doesn't really matter. We're the biggest dog on the street, and if they want to keep us buying their stuff, we're going to be frenemies. All right, so here we go. What do we have? Look at how the 50's held. Watch this. I don't know that this is going to stop in the near term. Breakout, collapse, exit liquidity, exit liquidity, exit liquidity, exit liquidity. Didn't even come into the 50 and just collapsed. Very weak that day. Exit liquidity. Didn't come in here. Exit liquidity. Now, will the Dow follow the rest of the market, which I expect to bounce on a pullback, or will the Dow continue to fade? My thought is probably going to continue to fade. But there's the 50 at 41,230. And then here's the low volume area, the low value area low, Gosh, my words are not working this morning. 41,400. Very likely. Very, very likely. Can we hold? Here's the thing about going long. Can we hold that first hourly candlestick low? Notice we broke it in the first follow-up hour, but by the third hour of Globex, we had pulled back and bounced. Line in the sand, if it can come down to 41,000, gonna be beautiful. Potentially hold a long. Stop 50 points wide, right? So if you want to wait it out, see how it holds here, you're going to be in good shape. All right? So also buy the dip formation here. We are not above the 50, so don't buy the highs, please. We have to see what exit liquidity does when the market opens. Where could we rise? Value area low, 41,400, 41,460, 41,540. Could be very bullish. Could be straight up. I don't know. We just have to see what exit liquidity does to see if they break their pattern near the open. So what do? We watch for the high near the open and see what happens to that line. Draw something on your chart and take a peek. Pay attention to that event. All right, so that's what we've got going for the YM. If the YM breaks lower, what are we staring down? Prior day's low, 40,700. 1.5 of the measured move from above is 40,500-ish, and then 40,200. Now, do I think that this is the bottom and we're off to the races? No, I do not. But this could be a very, very interesting day in terms of range action in the YM. Super important. Let's go to oil. What's oil doing? Well, it's holding weekly bottoms. I listen to Macro Voices, great podcast, by the way, Macro Voices, and they were talking about oil holding a 2-year support area, right? Bounces right off of that big zone. We know the administration would like to keep oil down, but the question is, can they actually do it? And look at first of all, look at the value area, right? This is the balance zone. It's where most of the traders have been sitting for a while, all right? Top of the range, currently, let's say 68, all right? Let's clone this one. 68. Top of the zone, everybody's been selling there. It gets to that zone, they're probably going to sell it. Just saying. Right now, we have a downward 200, an upward 50. They just intersected each other, right? This, sometimes people call the golden cross, when the 50 moves above the 200. But this 200 is very downward sloping. Look at what we did in the overnight. We pulled back, tested 67, and bounced way up from that level. What could we be doing? I don't know. So here's the storyboard. If you look at a chart and it's telling you 3 different stories, get out. Hopefully you're not in, but get out and wait until the story clears up. How does the story clear up? We could say, hey, listen, I've got myself a high here. Now I have another high that's lower. But I also have all these higher lows. So how do you know? You wait for either the low to break or the high to break And watch what the traders do. Notice, last time they did that, they broke higher and collapsed. Could you trade the breakout here? Absolutely. Don't buy and hold and let it fall below your entry point, or, 20 cents, 25 cents below your entry point. Not going to be good. Okay? Wait for the bottom. If you want a long, try it there at 68.50. But if it doesn't come into those levels, don't dance around in here. It is nothing but garbage. And all you do is amplify your risk. That's all you're going to do. Okay. Oh, I didn't go to Bitcoin. Knucklehead. All right. So remember, Bitcoin, proxy for the NQ. It's going to bounce when the NQ bounces. At this juncture, it's been a proxy. Now notice, see this? There's no volume here because of this gap. No volume. So what do they want to do? They want to test this volume and resolve to the north. What is that number? 85,000. Listen, people are shorting this 85,000 in Bitcoin. If they are caught flat-footed, it's going to breach 85,700, pull back a little bit, and then hold to the north. As it sits, if we want to say, hey, what have traders been doing? They've been using every bounce as exit liquidity. Oh, it bounces up here, I'm getting out. Bounces up here, I'm getting out. But buyers have been coming in on the skinny and picking it up off the floor near 80 and near 79. That's what we're going to look for. Do we sit range bound? We could. My thought would be, if you're interested, you short at that 85,000 area. 250 points risk. If you're using a micro, not a big deal. Got yourself a beautiful trade, back down into heavy congestion. Look at this flat. It's a slightly upward moving average. What's it tell you? The price is going to print above and below it. That's what a flat average means. Price is going to print above and below it. So look at the ranges, look at the balance area, and wait to put in your chart. Now, let's say you go, wow, maybe it's a long out here. If you buy the break and it does not immediately reflexively move up for you, I mean, you give yourself 15 minutes max, this chart is not going to move higher. If it holds 15 minutes or so, it's going to start testing the the lower wicks of these prices to the left, and then try to get through the gap all the way up at 86. All right, let's go to gold. Gold has had a beautiful run, breaching 3,000. I believe this is a short squeeze, right? I believe it's a short squeeze. It's also a place where people go, holy cow, it's 3,000. I might need to buy some, right? So late buyers to the party in this gold action. Look at this massive congestion zone. Let's measure the width of it just with our eyeballs, right? First of all, we're going to put something up here at 3018. I believe as fiat currencies weaken, gold is going to move higher. Here's the thing. What we look at in the gold futures, this is a financialized instrument. So if things go sideways on us, it doesn't matter what real gold is doing, futures are going to fall. So just realize that. You don't buy and hold the futures. I don't, right? You buy and then you go, okay, here's some profit. I'm getting out of here. All right, so let's measure this with a Fibonacci. And let's see. Let's go high liquidity to high liquidity. Top of the range, Fibonacci, 3,015, and then above that, 3,050. I think those are very reasonable numbers. The question is, when/how? And because I believe this is a short squeeze, look, no volume here. There's no volume here. Volume has got to follow price for price action to hold. And so the base case test for me is the pullback of $50, $60 into all of this liquidity right here. And then we're off to the races again. Okay, I would be very careful buying gold in this environment because that is a short squeeze, folks. All right, here we are. SPY. What's SPY doing? Low, lower low, higher low, higher low, lower low. Where are we testing? The 50. Notice, since we started talking, we really have not moved up from this zone. Every single test of the 50, remember, traders are simpletons. I'm talking about myself. And we look at the near past and we go, well, it did that last time. I'm going to try it this time, see if it happens. Right? Here's my value area low. We came into it. What is that? 550-ish? Beautiful zone. Now we're popping. Where do we go? Point of control. That's 560. That's where I think we're going. Do I believe exit liquidity is going to try to move down there? Why, yes, I do. Look at all the selling here. Tons of selling. Tons of selling. Low volume node. So if the sellers get caught flat-footed with the rise above 561, they are going to push it as best they can into 563, 565, 567, and then the VWAP for the entire range. This is a balance area. We are in the balance zone, so it's very likely that we move to the top of the balance zone as inventory continues to accumulate in this area. We have upward trend, we have downward trend, we have upward momentum, downward 50, expect exit liquidity to try to make a short action event show up here at 560 to 561. If they can't do it, it's going to put them on their back foot and we're going to run higher. Let's take a look at the Qs finally. Same sort of thing. We sort of stopped right here, 50 flattening. Notice, bottoming formation inside of the value area low. Now, value area high is all the way up here at 494. Could we get there? Absolutely. If you have not been through any kind of bear market correction events, you are about to be mystified by the speed at which price action can move to the north. It moves faster in a short environment, a short exit liquidity environment than any other place in the market at any time. And if you've not lived through one, be prepared to be amazed. Okay, so what do we want to look at here? Opening range, 471. We don't need to lose the pre-market low. If the pre-market low gets tested, we must recover it before we can consider a long action event. It is what it is. Stay out of the way if it loses 472 on the Qs, right? Let it recover, and then you can ride it up. Right now, I suspect exit liquidity is going to start to pile in just a little bit, and we'll see what goes. All right? If they pull back, make another higher low, we're off to the races, folks. Today could be incredibly interesting. I want you to be careful. Of course, we've got the Benzinga Options Show with Ryan Faluna. We've got Midday Moneyball at noon to 1. And so I look forward to everybody's interaction. And we'll see you then. Be careful.